Hey guys, it's Sunday. We'll do an update on the markets. We'll look at a few things. I'm just reading this headline actually, it just came out 10 minutes ago. This is Bloomberg and Guardian. It says FBI is sticking to its conclusion that Clinton's handling of emails wasn't a crime. So now they're backpedaling again. Just unbelievable. You would think then dollar peso should go the other way. Remember we've been long this one. These guys are just unbelievable. So I'm guessing now that the NYPD will probably come out. People aren't going to stand by and put up with this crap. These guys are just unbelievable. So that was 10 minutes ago. So here we go. I mean, this was the big spike move. When was this? We had 2 weeks ago Friday. This thing's not cooperating with me. Come on. um, Here, guys. It's 4-hour chart. So this was that big spike on the FBI news, and then we got follow through. So we've come all the way back off. I mean, right now I'm doing this. The markets are still closed. Um, the Tokyo session for Sunday night hasn't started yet. So we'll see. We want to stay bullish basically as long as we're above these highs. But if we do start to break this low or this low, it might be interesting. But we took most of our profits correctly into this move, so we'll just wait and see how we open up. But I want to get this back on. I mean, even on this headline, don't think that that's over. I mean, all these emails that they found on Huma, and it sounds like these guys at the NYPD basically told the FBI, either you guys do what's right, the right thing, or we're gonna come out with this stuff. So we'll see. But this is still going to be bullish as long as we're above longer term, as long as we're above these lows here. Let's look at stocks. Still broken down, okay? Here's your 4-hour. Look, this low has been taken out. You go to the daily chart. We're hanging out here at the 200, but my call has been that we're going to test pi down here, 2050 on S&Ps. And now we're clearly kind of in this bear market mode again on the daily chart. We're making lower lows, the bands are rolling over. So this is back to the same type of pattern we had at the beginning of the year. And then here in March, basically been in an uptrend ever since, and now this has changed the last couple of weeks. So it makes sense that the volatility or the VIX has picked up. You know, I'm currently flat S&Ps, but I'll be looking to sell any rallies there. The Dow is trading better, so it kind of shows us the international capital flow most likely. They come in and buy the big blue chip names. So when you're late cycle, we want to be long. If you're going to be long, it's better to be long the blue chip, big liquid names. Something with a dividend too that looks kind of more like a utility or a bond. But we can see the Dow hasn't even cracked this low yet on a weekly level. So Dow's holding in better. And then we're still short the Russell. I've been short since August. And this chart just looks horrible. There's a chance we hold here. But more than likely, I think we're going to be settling into these lows down here, 1100, 1080. All right, so we want to stay bearish there. I'm just going to keep trailing this thing longer term. I don't really have a good chart of the DAX, but Germany's oversold, so we covered some Friday. I have a short position there, and looks like we rolled over. I mean, it looks pretty bearish. Um, I'm trying to. What's the European financial ETF? I'm trying to think. UF. Yeah, that's it. So it looks like we made another longer term lower high. Guys, this pie, prices in the southern hemisphere, it's below the 200, it's below pi. So this is going to accelerate if we break these lows. I mean, I know this is the ETF, but the overall index, I mean, it looks pretty similar to US financials. Starting to break down again. We made some nice sales, bought some puts towards the highs. You basically double topped up here. So we continue to want to be bearish to financials. Again, we're late cycle, so do not want to be getting bullish financials. It just sounds like those guys are using the wrong numbers as usual also. Let's look at the bond market. Just kind of a grind higher. 10s, this is the 30-year. Look at the 10-year chart, though. 10s have performed a lot better than the duration further out the curve. I mean, we held pi in 10s. You bounced. Now, if you take out these highs from October, that's going to look bullish again. So everybody that wants to, every time we get these deep pullbacks on the weekly chart, look, we held the lower bands exactly where we should have. So we take out these highs, this is going to look bullish again longer term. And I want to stay long bonds, and we are. We're playing short 5 years position against that, which I like. So I'm just being patient there. I mean, I sold last week. We kind of grinded back here towards the highs. I'm just going to hang out and wait for something a little bit closer to the top end of this range. All right, 121.5 or so. So you can see last time I was short 15 contracts, lightened up all the way down to just 2 lots down here towards the bottom, and now we're getting back short. But I mean, my average core position's out of the money, but I'll work that a little bit higher. And then, of course, we're going to be making money on our long bond position. So that's okay. We can let this go higher. And then just like this, we'll reestablish a short. When we get a cycle where it rolls back over, then we'll realize gains on 5s. It's similar on the 2-year chart. So despite all the Fed talk about raising rates, 2s have been going higher. Higher price, lower yields. So this is still a range trade. We were at the bottom of the range a couple weeks ago. Now you're kind of moving back towards the top end of the range. But I think that is interesting that you have front end rates are going lower, despite everyone seems to be pretty confident that they're going to go. And then, we had the dollar back off too. So I think we're kind of trading the election headlines. So it'll be a big week. I'm looking for a higher low here on the dollar, and same thing on the euro. Now, I may play a little bit of defense here because we'll see where we open up. But you guys can kind of see the hourly chart's still bullish, and we made a higher low. We made a higher low. This was kind of down trend. Now we're kind of curled back up, intermediate term. So I wanted to see us fail here. The fact that we didn't do it, I may take half of my risk off, meaning I'll stop on 1/2 of what I have on short, longer term. And then I'll put it back on at some point. Maybe I'll put it back on higher up here at 112. If it fakes me out and then comes back lower, I'll put it back on. But again, I would remind you, I am playing a longer time frame. That's why my size is much larger than normal, because I'm playing this downtrend. Okay, and then what we're trying to do is play this. This was the start of maybe the move lower, longer term. If it comes back above this candle, all right, so be it. We're probably going to have to stop and wait and see. But you'll see that 112 area is kind of coming right in at the 30 week. So between the euro and the dollar, we'll see if we get a higher low in the dollar and a lower high on the euro. But I'll probably put an update out on that on the open or at some point tonight. I really don't like it. I didn't really want to see it above these highs. We sold well here, covered some, and then I wanted to see another lower high and then new lower lows below this pivot, and obviously that has not panned out. So it is what it is, guys. You know, these things happen when you're working a longer term position. I mean, see how my distance now on where I'm short from, kind of out of the money. I don't want to see this. This is kind of going the wrong way on me, so I may just cut half my risk. But that is why I covered. That was the right move, because if you didn't cover here, you couldn't re-short here, or you could, but it makes it easier when you cover well to re-short, get another piece back. So I'm still trading around looking for this turn. But it's okay to play a little bit of defense right here. So stay tuned on that one. I think that's probably good for tonight. All right, so I'll hit you guys on the chat. For those of you that are new, I have a chat room that's free to join. Just go to jenkinsrm.com. That's RM as in risk management. And we have a chat room that's powered by Slack. And just visit the website. I guess I could bring that up. I don't know. Anyway, jenkinsrm.com, guys. You can join there. All right. So I'll talk to you in the room a little bit later. Enjoy the rest of your evening.